Hi, everybody. Scott Riley, the Market Update Desk, Snowpocalypse 2.0, otherwise known as January 12th in West Michigan. Welcome to a snowy weekend and a cold weekend. Hope everybody's staying safe out there. By the way, if you're a buyer, this weekend is probably the best weekend of the entire year to get an offer accepted. In a competitive market, that snow out there is your friend. If you can get out, look at houses, make offers, make it a priority. Yesterday, we had consumer price inflation, came in a tenth higher than what the estimates were. Um, Took the bond market a little bit in the negative to begin with, and then we clawed that back and ended up a little bit in the positive. Today, we have the wholesale version of inflation, and that actually came in better than expected, which is positive news. So, producer price and producer price index fell 0.1% for the month and ended 2023 up 1% from a year ago. Now, the Dow Jones had been looking for a monthly gain of 1%, so we were flat there or at expected. So, very, very good news. Core PPI, this is where we got our benefit. Core PPI was flat against the estimate of what was expected, 0.2% increase. Now, within the core, we did see that trade services rose 2.5% for all of 2023 after being up 4.7% in 2022. So that was part of the area that we got our positive movement in. With the wholesale inflation coming at expected or below in the case of core, we're getting some positive traction today in the bond market and the stock market. So these are great things. The markets reacted positively to this, and the stock futures came out increased for the pre-market, and the treasuries came out lower in the pre-market, and those have followed through within the trading day with all three indexes, the Dow, Nas, and S&P up for the day, and we're a couple ticks lower in the 10-year treasury. So those are fantastic pieces of information going into the weekend. Now, prices for final demand goods declined by 0.4% in December, the third straight month of decreases. Now, that's according to the release. Diesel prices actually tumbled 12.4% month over month, even though we had increased gasoline prices. So that's going to help the wholesale shipping costs. That's really, really good news. Now, from a result of these numbers with inflation, traders in the Fed futures markets are now pricing in a 70% probability of a decrease in the Fed funds rate in the March meeting, which is the 19th and 20th of March. Now, we've gone kind of across the board on what this March meeting could be. We got all the way up to about an 88% chance of a rate decrease down to 50%. Now we're back up to a 70% opportunity. We're also forecasting in up to 6 decreases in the Fed funds rate. Now, if we can keep everything in order with inflation and jobs numbers, those decreases should be right in our tunnel of things that are coming. What that'll do to mortgage rates is to continue to keep them stable to decreasing. So home buyers are going to be able to afford a little bit more this year than last year based on the interest rates. Now, what the challenge will be, the lower interest rates are going to bring more buyers, is what we've been talking about. So give us a call this weekend. We'll get you pre-approved, help get those offers accepted. We're on call all weekend. Hope everybody stays safe and warm and everybody's power stays on. There's a big question as far as power. So have a great weekend. We'll talk to you soon.